right. All right. We are live. Good morning, good morning, good morning. How we all doing? Hopefully doing good. Alright, make sure everything sounds good. You might hear a repeat for a second. Yep, sounding good. Alright. Yesterday was a crazy day. A good one, especially for those Ulta Beauty shareholders. Ulta Beauty killed it yesterday. Up 10.8%. Gosh, my only regret's not buying more of this when I did. I didn't have much funds, but I liked what I seen, so I threw like 150 or something at it at a 396, and I was hoping to be able to buy more, but it's up to 472 now. Hopefully we get another buying opportunity with this one, because this one's one I really want to get a little bit of a bigger position in. So it's basically flat on the year now. I'm really hoping I get another opportunity below 400. I just have to wait and see and let the price point come to me. I do think that it's got a great future ahead of it, though. And there's not really all that big of cosmetic and like makeup companies and stuff that do what Ulta Beauty does. Oh yeah. Good morning, Dillo. What's up, man? But I'm just really hoping that I get another opportunity with this one. I mean, it's still like on an adjusted free cash flow basis, it's not awful at right at 4%. So, I mean, even though it ran up, the valuation is still not terrible for it. It's just, I got in at such a good deal, I don't want to ruin my average buy-in price. Ugh. What have Yin's been buying? Yin's buy anything yesterday? I know yesterday it was a really nice day for the market. I know another one I've been looking into is Celsius. If you believe in long term, you don't want to be too scared of averaging up. I don't mind averaging up. It's just the thing with Ulta Beauty is I got in at 396 and it's at 472, so it's like an $80 average up, and I would like to not do that. It's not that I don't believe in the company long term. I mean, their financial sheet is absolutely bonkers, but yeah, I'm just gonna wait and see. I started a small position in Celsius as well, the whole energy drink company. And of course, whenever I buy in, I got in below 50, and then it went up over 5% after I bought in. Loading up on Amazon. Amazon is growing amazingly. D-Dog and D-King. DraftKings is killing it. Let's see what D-Dog, that's Datadog, isn't it? We'll check them out and see how they've been doing. Oh yeah, since Since beginning of last month, they dipped into the 80s and now they're up to 118. So that's a real good return on that. You said DraftKings looks like it's doing pretty good still too? DraftKings. Oh yeah, DraftKings doing ridiculous. It's up 252% this year. This thing's up as much as Nvidia. That's nuts depending on when you got in, man. And yeah, Amazon's one that I'm super long in as well. It's just they had a couple bad quarters with negative, well, a couple bad years with negative free cash flow. But if you look at the quarterly here, they're right back on track. The last 2 quarters, Amazon reported over $5 billion positive free cash flow, and then over $8.7 billion in September. So they are back to making that money. It's just, again, 147's a little rich for me. This one is one I wouldn't mind to see dip back down into 120 area. Now, one that is still down, surprisingly, that hasn't... It's went on a run, but not as much of a run, is Google. Now, this would be one that I would seriously take a look at because they're at 131. Everything else has just took off to the moon, and I feel like this one can't really just catch its footing for some reason. I know the big thing with them is there's like a court hearing or a lawsuit going through that they got like a grasp on Apple iPhones being the default browser on those, and if that goes through, I mean that would definitely hurt Google, because you gotta look, there's like what, 2 billion plus active service users on Apple. And I mean, if you take away the ad revenue of even a quarter of that, that's going to hurt. It's going to help Microsoft, though, because you know they're going to jump all over that with Bing. Absolutely going to jump all over that. How's everybody doing this morning? Got a couple in the air. You want to buy more Moat? Moat's that's an ETF, isn't it? I think that's ETF. Yeah, it's Morningstar Wide Moat ETF. They're up 23% for the year. It's not bad for a ETF. This is one I've not looked into for a while at their holdings. If there's anything you want to look up or whatever, just let me know. Got any questions about literally anything? Hit me with it. Moat. Let's check out Moat ETF here. Up 81.9% over the last 5 years. That's not too bad. That's pretty good. What's their holdings, though? That's what I want to know. Moat holdings. This isn't showing me what I want to see. Is it this one? I think it's this one. Yeah, that's good. That's good. That's good. Where is the goodies? Here we go. Wide Moat ETF. Salesforce is good. Schwab. U.S. Bank Corp. Walt Disney. I mean, if you haven't seen it or not, Disney announced that they're reinstating their dividend. It looks like it's still going to be semi-annually. I think they should do quarterly personally, but I'm not Bob Iger. But I think they announced 30 cents semi-annually, so that's 60 a quarter. It's, what was that, 0.6, 0.7% yield. It's nothing special, but I mean, the fact that they brought that back does show that they're trying to get their finances and everything back in order. But with this ETF, I feel like they've got a lot of banks in there. I mean, Wells Fargo, U.S. Bank Corp, Charles Schwab. I mean, not that I don't like bank companies and or holdings. Nike's big in here too. I don't think Nike's got all that great of a future of growth and stuff ahead of them. But I mean, this thing's went up 80 some percent over the last 5 years. So I mean, they're doing something right. And another thing I don't like, another thing I do like about it is it's only got 50 holdings. I don't like ETFs that's got like 500, 800, 1,000 holdings, because there's some of those at the bottom where you're owning 0.1%. Like, do you actually own anything in that? If you own 0.1% of something, I mean, sure, you can make the argument that you do, but like, it's not my thing. It's the reason I like SCHD so much. Polaris, Campbell Soup, Emerson, Banks, BlackRock. There's a lot. These is financial heavy. 3M. I mean, it's a good little foundation stock. Well, ETF holding. Not really my cup of tea, personally. But yeah, the watch list. Looks like John Deere is still below its 200-day moving average. FICO is just doing what FICO do best, and that's just go straight up and to the right. This company never goes down. Like, they had a dip once this year. It's crazy. They're up 90%. Like, what? I understand you got a big moat there with, you know, your FICO credit scores and everything. Could you, like, give us a buying opportunity? And they're still buying back shares. Are they still buying back shares at these prices? No, look at that. They're smart. They got the big brain. They went up and they stopped doing share buybacks. They were buying back shares when they were in the dip. That's beautiful. Let's take a look here. Let's see. They were buying back shares pretty much for the last 2 years, and then they stopped at the beginning of this year. I'm assuming when everything started going up. Oh yeah, they're doing very well with their capital usage. I thought that this was one just kind of like how Apple, they buy shares regardless if it's $8,000 or if it's 8 cents a share, but no, it looks like they if they think their shares are overpriced, they just sit on it. I like that. I like that a lot. And this company does not have to increase their capex to keep expanding. The moat with this is so ridiculous because, like, every loan, every car loan, any financing, anything that happens, I even think for houses, they have to go through them at Fair Isaac for, like, the FICO scores and stuff. And you know, like, I could only imagine how much money this place makes a day. Even if they charge just $1 for per FICO score, which I think they increased their pricing here recently. I know it was $1 at one point. So some of the news articles says it's a buy on a pullback. You don't say, but there's no pullbacks. My Ally has been booming. Ally Financial, I know they had a little bit of a rough, I think it's like the last 2 years they've been beaten up a little bit, but oh yeah, they are on a run. They were at 22.76 at 30.86 now. I know, yet again, talking about like financing cars and stuff, that's a big thing for them is financing vehicles. I think it's a majority of what they do, but with the interest rates and stuff up as much as it's been, I know that's probably been impacting their bottom line. They've not been financing as many vehicles. So once that turns around, hopefully starting March, fingers crossed. I know that's what everyone thinks is going to happen right now. Once those interest rates start dropping, people are going to start buying homes and cars again, and they're going to benefit from it. So right now, if you hold this, their payout ratio, 32%, there's nothing in danger there. Just collect those dividends and just reinvest it. I mean, they're very financially stable. Their debt to EBITDA is not all that bad. Well, no, their debt to EBITDA is kind of meh. Yeah, they got 20 billion in debt. They got 8 billion in cash. That's not bad. That's still not bad. They didn't increase their dividend last time. It didn't look like though. So if they were on a dividend streak, it is no longer. But still, just sit and collect those. Average cost is 25. Hey, I mean, if you're a believer in it long term, absolutely. Especially because I still think it's down. Yeah, it's still in a pretty big dip. This thing was over $55 a share at one point. Still down around 30. Kind of view it as a stable MMF and makes 5% cap appreciation. Yeah, it's a decent buff. Didn't Buffett sell out of Ally Financial? I feel bad for Buffett with Charlie Munger dying. Like, you know that's going to be hitting him pretty hard. And no, he still holds Ally Financial. You're right. His average buy price is $26. So you're doing better than Buffett. But yeah, definitely, I see your point. The cap, just like what little bit appreciation you get with it, plus the dividend. I think that's a perfectly okay position to have. I love looking at all these big quote unquote super investors portfolios and just seeing what all they're holding, what makes them tick. I bet Buffett's loving his Paramount conviction now. I know he'd been getting a lot of headwind over that because, I mean, Paramount's had an awful year up to recently. Let me take a look here. Yeah, Paramount dropped from the 20s all the way down to 1088, and then it came out that Apple may be merging with them. Absolutely going to be huge for them because, again, the biggest model with Apple is their services model. You know, you buy an iPhone, you've got like 8 or 9 different things that come with that. And Apple TV is something that is slowly but surely growing, and that would save Paramount. That would be the arbitrage play that Buffett would be hoping for, because he's been asked about Paramount because it's went down and down and down, and his response is, "I'll see what happens. I'll see." I mean, that's what he did with Activision. He bought Activision in the 60s, and sold it right at 95. It's, again, that's what, almost 50%. Pretty good for something that you just had to wait like a year and a half for. It's like around 5 years worth of gains in a year and a half. But it's those types of things that make it to where he's so good. I mean, the guy's got 20% annualized return over the last 60 years. It is nuts. And if you heard that, guys, that's my kittens freaking out and running into the Christmas tree. But yeah, Buffett's been absolutely killing it for the last 60 years. No. See no Munger's name there. Sad. But yeah, hopefully everyone's doing good and having a real good morning. And it's getting on there, chilling for a bit, checking out the watch list. I know next month is going to be a big month for dividends. I know my SCHD lovers out there are going to be happy. Definitely got some dividends rolling in from that. We got Hershey Extra Space Storage next month. We got Texas Roadhouse next month. Got my railroad company, Canadian National Railway, coming out next month. Going to be reinvesting every bit of those. And just get that dividend snowball rolling. We're sitting at 144 right now on our annualized. Why is ALB down? I don't know. We can go take a look and see if there's any news articles that might hint toward why. Let's see. Albemarle Corporation. Probably saying that wrong. Yeah, they're down 41% year to date. Looks like I tried to bounce off this bottom, but it's kind of like evened out yet again. What is this? Basic Materials. Albemarle Corporation develops, manufactures, and markets engineered specialty chemicals. Is it a chemical company? Lithium. They deal a lot with lithium. Company serves as energy storage, petroleum refining, consumer electronic construction, automotive, lubrications, pharmaceuticals, and crop protection markets. Oh, their capex is going up like crazy. You never want to see that. Never want to see that. That means they're having to spend more and more money in order to make more and more money. Yeah, their capex is going up quite a bit. It went up from 953 million to 1.26 billion from 2021 to 2022. And it's still going up. This year it's done nothing but go up quarter over quarter. Yeah, you never want to see that. Free cash flow, it looks like it's dropping. They had a big negative quarter. Free cash flow back in June. So, I mean, I see why it's down. Revenue's been declining quarter over quarter. EPS is declining. Free cash flow is declining. I mean, depending on what their main customers are, if they primarily focus on lithium, not a lot of people doing the car thing right now. And I know Tesla isn't making as much. They're having to cut back on their prices like over and over and over again just to try and get what they have out the door. So that might be something that's impacting them. If I was to take a guess, there's not the car manufacturers aren't making as much right now because no one's buying anything because of interest rates. But yeah, that would definitely impact their bottom line, like, big time. What is the beta on this stock? So it looks like it's just up, down, up, down, up, down, up, down, just all the way through here. 1.67 beta. Yeah, that's, I don't know. That's probably one I'd stay away from. What's the beta on Tesla? Just curious. Just curious. 2.28. Oh, gosh. But yeah, if I was to take a guess, that's why. That's why they're down. How's everybody doing? Just looking up stocks, little stock talk. If you haven't uploaded buy and hold forever video on Wednesday, make sure to go check that out. And yesterday, I did a video of how many stocks you should hold in your portfolio. So make sure to go over and check those out. I would greatly appreciate it. Yeah. Hello, welcome. How we doing? How about Vici? How about Vici? I love Vici. I still love Vici. Vici finally cracked up above $30. This company's just it's the REIT that can. This thing does so many things right. 100% collection on their rent from their tenants. I think right now they're sitting at 100% occupancy. So a lot is going right for Vici. And when it dipped down into 27, 28 area, that was definitely like the load up back to truck up zone. $30.50. I still don't think it's that bad of a price. And they're still expanding. They recently bought some like bowling alleys, I believe. I bought a bunch of those, so they're expanding outside of Las Vegas. But I know their main big boys are Caesar Palace, and you know they're going to be paying their rent. Vegas is just crazy busy all year round. And the thing with Vici bragging more about this holding. Um, Vici is a dog, you're right. This thing's above 5% dividend yield right now, and they keep increasing what they pay you over 7% year over year. And they've been doing that pretty consistently. If you look here, 2019 to 2020, about a 7% raise or so. 2020, 2021, again. 2021, 2022, again. And then 2023, they increased it again around 7%. I've been buying more Vici. I do not blame you whatsoever. One of the only reasons I don't own Vici is I got such a big holding in extra space storage, and I don't want to just load up with real estate in my portfolio. I've managed to do very, very well with what I've got set up so far, and I'm trying not to mess with that flow, if you know what I mean. But yeah, Vici's awesome. I absolutely love Vici. Let me know if you got any other stocks you want to look at. We got BX. I think it's BX. Yeah, BX. I don't know. Let's take a look at it and see what it is. See what we got going on. Blackstone Incorporated. Blackstone. Didn't BlackRock just buy some more Blackstone for their ETFs? This is like financial management firm stuff. Excuse me. Oh, there are dividends all over the place. Oh my gosh. Well, they got like a dartboard set up from 1 to 100, and they have someone throw it at it, and they're just like, oh, if ever it lands on, it's what we're paying a dividend. This thing, it's different every quarter. The revenue is kind of flat-ish. It's slowly going up 6% over the last 10 years. Free cash flow, love to see that. That's silly. 27% increase over the last 10 years. That's pretty good. That's pretty good. And it looks like here recently was the best time to try and jump in. Is Mystery Inc. publicly traded? I don't know. Do you have a possible ticker symbol? I've never heard of Mystery Inc. Makes me think of like some Scooby-Doo stuff there, the Mystery Mobile. But for the year, guys, we made it. With my portfolio, we don't have any more earnings surprises, nothing for the rest of the year. My next earnings is at the end of January. So what I've got set up, I just got to sit on my hands now, and nothing's on sale. Let those dividends come in and build up a little bit of cash on the sideline. That's the game plan going forward, and just see what 2024 has in store for us, because it might be absolutely nuts, depending on what old Jay Powell says. Everything about next year falls on Jay Powell. If he comes out and he's just like, well, interest rates, I'm scared, increase more, market's going to tank. Absolutely tank if they increase any more rates. Because we're already pricing in a cut either in March to June. I think the market's already priced in one cut. LMB, and Amazon is going to keep booming. Absolutely. Amazon's going to boom forever. That is one company. If you told me, hey, you can only invest in one company right now, I'm going to freeze you for 20 years, and then you're going to come back and see how much money you got. Amazon would definitely be in the running for what stock I would throw that money into. LBM, Limbosch Holding. Again, probably saying that wrong. They're up 200% year to date. What? 263? Oh, their financials is all over the place, though. Oh, my gosh. Okay, let's see what we got going here and what we're working with. Industrial, engineering, and construction. Building system solutions. 2 segments. General contractor relations and owner direct relations. Okay. Again, something I don't really know all that much about. Company serves research, acute care, inpatient hospitals, public and private. What? What? They sound like they just do everything. Excuse me. It sounds like they've just got their little hands in everything. See what the news says about it. Exciting times ahead. Stable free cash flow margins with some risk. There's risk of everything. Compelling opportunity and defensive name. I mean, it's up 200. That's up a lot this year. It's crazy. If I could go back in time, not even that far, just to October last year. If I could just go back to October last year of this one, it'd be pretty great. They were sitting at 8 a share, and they're now sitting right at $40. It'd be neat. It'd be real big neat. How does McDonald's look? Well, let's take a look. I know I seen a video. Joseph Carlson went over it. McDonald's is starting like another smaller chain of like coffee shops called Cosmic, I believe. And I mean, it looks interesting. I guess McDonald's just seen Starbucks making all this money, and they were like, hey, so we have all this money, but we want more. Can we have some of what you do because money? And they're going to start opening up some Cosmics. I hope there's one near me because I'd like to check them out. Like, Starbucks is awesome, and McDonald's coffee and breakfast menu, it's one of their most popular things. So I could see them doing very, very well. But McDonald's, it's all reliable. It's the little engine that could and just keeps on keeping on. They had this big dip recently where they dipped below 250, which would have been like the prime buying opportunity. They're at 285 now. Still not a bad valuation. Or just a free cash flow yield is 3.37%. So that's still reasonably priced for what you're getting here. Dividend yield 2.37%. Payout ratio is right at 54%. Again, no red flags there. And their last dividend hike was 10%. So I mean, you're getting a very defensive company in McDonald's, very reliable, something that you know and are confident is going to be here in 50 years from now. I mean, it's a great company. I like them a lot. The return on capital employed is above 20%. Yeah, I mean, I could just brag about them all day long. The only thing that I would knock them for is their debt to EBITDA ratio. But even then, it's not completely awful. I think it's just a little bit over 3 times. How do you determine value? So the way that I determine valuations is I look at where the stock has been. I usually will pull up a 5-year chart, and I will see if there are any major dips with it, and then I will check out the adjusted free cash flow yield. Usually, the higher the free cash flow yield, the more on sale, quote unquote, that it is. To give you an example, I will look up Ulta. So I pulled up a 5-year chart for them, and I seen that they were below 400, and they hadn't done that in the past year, and they were kind of hovering in this 400 zone for a hot minute. They've been hovering around the 400 area since 2021, and then they would have these little runs here, and they had a big run up this year over $545. So I was sitting there, I looked at this, and I was like, okay, what's definitely in a dip. And then I went and looked at the adjusted free cash flow yield. I think that was close to 5% then. And that screams buy to me. A 5% adjusted free cash flow yield, buying opportunity. Buy. I wish I'd had more funds on the sideline. I would have definitely loaded up more with Ulta. But my buy price was $396. And that wasn't even that long ago. And it's already up to $472. So I've already made almost 20% on my money just sitting here. And my overall portfolio year to date, I'm up about 25%. I am dominating the S&P 500. I'm not going to desk made out of wood. This counts. But I'm wrecking the S&P 500. I'm up about 6% on them, 5 or 6%. I finished last year up 6.5% over the S&P 500. So, I mean, if I can just keep this trend going, be awesome. I would absolutely love that. Speaking of Starbucks, we can absolutely look at some Starbucks. I love Starbucks. I got one. It's a town over from me. They're always busy. Let's see here. Dividend yield 2.3%, payout ratio 60%, so not too bad. They shot up over 100. What was it, $107, and now they're down to 99. If this dips in the low 90s again, might be a buying opportunity. Not financial advice, to your own research. But I mean, Starbucks is another one. They're so popular. They're opening up stores left and right. It's like every day they're opening up a new coffee shop almost. They have a website you can go to where you can literally look up all their openings. And just even internationally, like they are expanding. And the second all this China chaos goes away and Starbucks can start expanding there rapidly, the free cash flow and revenue that this place is going to make is going to be bonkers. Absolutely bonkers. But yeah, this has been a very reliable market beating holding for quite a while. And I know if you look here at the free cash flow, it might not look all that, all that sexy. Up 7.6% year to date. They had the 2020 dip. Everything had a 2020 dip. But I mean, I like them. I like them a lot. I don't like them at 100. I like them at 90 and below. But yeah, that's my thoughts on Starbucks. The return on capital employed is almost 30%. It's great. It's very, very good. Welcome, everybody. How are we all doing this morning? We're just doing a little stock talk. If you have anything you want me to look at here through Qualtrim Insights, let me know. Hit me with those stock tickers down below. If you have any questions about anything else, let me know as well. It could be gaming related, football, music I like, favorite cookie. I don't care. I'm just here hanging out. Getting those, making the YouTube algorithm happy. AVGO. Alright. That's Broadcom, isn't it? AVGO. Another one. Yeah, semiconductors have just been doing crazy this year. They're up 68%. I think Intel is up 70+%. But Broadcom, this is one with the whole valuation thing. Even though they're up this much, their adjusted free cash flow is above 4%. So to me, that still says that this isn't at a terrible price. Dividend yield's 1.99%. That's like the lowest I've seen this in a while. Payout ratio 56%, not too bad. Debt to EBITDA, very, very manageable. It's not even 2 times. Love to see that. I think it's right at 2 times, either or. Yeah. Just quarter over quarter, looks like free cash flow has been growing. I mean, there's a lot to love with it. Packers going to win the Super. Get out of here with that. Packers going to win the Super Bowl. Yeah. Jordan Love's going to carry him to the playoffs. I don't know, they might. They got a good running game with Aaron Jones and AJ Dillon, I think, is their other running back. But I mean, Broadcom, I like it. I like them. I think they're going to do fantastic in the years ahead. Jordan Love is a dog. But I mean, my surprise of the year is definitely Intel. This is a turnaround story of the century. This thing, End of the world. You thought everything was just going to go to poop with it. The company had dropped from the 60s down into the 20s. And the world was ending. A meteor the size of the moon was coming toward us. And then they reported a positive free cash flow quarter. It wasn't even all that positive, just slightly positive, and it is just boomed. Took off to the races. Look at that. Awesome. They did cut their dividend, but we're going to shock some people. I mean, they going up against Chiefs. Chiefs are pretty good, man. You got old Patty Mahomes over there and Travis Kelce, Taylor Swift's boyfriend. But yeah, Intel, AVGO, Nvidia, all those have just been absolutely bonkers this year. My team is really, really good at barely winning. Like, we win by like 3 points, like a touchdown or less every week. And that would be the Steelers. Oh, Kenny Pickett broke a Steelers record, most consecutive passes without a touch, without an interception. Per good stuff. Who? Kenny Pickett. That's the quarterback for the Steelers. We drafted him last year. Yeah, he was our first round pick last year. I'm surprised that he dropped as low as he has. He's actually done a really good job. I think Steelers are 7-4 this year. I mean, it's not bad at all. Welcome. Getting some more in here. What's up, guys? Because he only throws screens. I mean, if it works. If you're winning because you keep throwing the ball 3 feet, I mean, I'm not going to argue with it. If it ain't broke, don't fix it. They did get their running game back, though. They're running a dual back setup similar to what they did with Willie Parker and Jerome Bettis. Najee Harris is their Jerome Bettis. What's up, Kevin? What you doing, man? LHX. Let's take a look, guys. LHX. L3 Harris Technologies. Okay. Do a little breakdown here. Just free cash flow yield 3.79%. We got dividend yield 2.39%. Payout ratio 58%. Not too bad. Take a look at the 5-year chart. They were up to 255 at one point. I agree with you there, Dillo. Absolutely agree with you there. Down to 194. Revenue growth over the last 10 years is up. It looks like it's been declining slowly, though. Same story with free cash flow over the last 10 years. Not too bad. Stock-based comp, not an issue. So the thing that kills me is companies that, they look good. They present what looks like a great free cash flow, but they're giving out just as much in stock-based comp. Kills me. Makes me want to scream. EPS. Yeah, I mean, everything looks like it's trending in the right direction with them. Very manageable debt to EBITDA ratio. Dividend's been increasing. Over the last 10 years, they're rated 10.5, but their last couple increases have been very minor. McDonald's does have major milkshakes, you are right. Return on capital employed slowly growing. I mean, their CapEx is dropping. But my concern with this, their CapEx is dropping, but as their CapEx is dropping, their revenue is dropping, and their free cash flow is dropping. So is this a company that is reliant on CapEx in order to keep going, essentially? That's a slight concern. Looks like they're a defense, aerospace, and defense company. Okay. I don't know much about them. The only aerospace company that I really know a little bit about, Northrop, Lockheed Martin, and General Dynamics. I haven't really looked too much into them. I don't know what they do. Communications segment provides tactical communication, broadband, secure mobile network communication equipment. I mean, defense stocks, aerospace defense stocks are always reliable. Because if there's anything that you can count on, it is America and the government always having their money on the side for that. It's something you can always count on. So I mean, I would say they're very safe, especially if there's conflict in the world. These just boom, just take off. And a prime example of that would actually be Lockheed Martin here. They did have that recent dip down here, but Lockheed Martin, this thing is just, it's slightly all over the place in a way, but just reliable growth over time. Over the last 10 years, 223%. It keeps on keeping on. I don't mind defense stocks. I don't hold any in my personal portfolio, but I mean, yeah. Because these are my holdings. This is what we're rocking. We did get another position. I know. But it's so small. It's like 1%. And I just wanted to nibble at some Celsius. It dipped below 50. So I did buy a share and a half of Celsius, and I put some more money in SCHD. Hershey, I keep averaging down in. We've got our average buy price down from $2.25 with Hershey down to $2.14. So it is still just dropping. And I mean, if it dips any further, excuse me, if it dips down the low 180s, I'll definitely start nibbling at it some more. But I'm okay with it right now. It makes up it's a pretty big position in my portfolio. But again, I don't mind owning a lot of a good thing. So I mean, if it keeps dipping, I'll keep buying. One that I think is gonna have a really rough year next year, because I dove into them a little bit more, is Deere and Company. Apparently they came out and said that next year is gonna be a rough year for them. Missed outlook, equipment sales decline, and they think that they see next year being pretty rough for them. After the farm equipment makers 2024 guidance misses estimates. I mean, this might be a buying opportunity. I've definitely got my eye on John Deere. Again, just free cash flow yield is 3.79%. This dips into the 4s or touches close to 5%. It's going to be hard not to. I use a John Deere at work almost every day. I drive a tractor. And, I mean, they're great. They're great machinery. The profit margin, operating margin with this company is very good. Debt's a little bit on the high side, but this is definitely one I've got my eye on. 110% I've got my eye on some John Deere. There's just not that many things in a dip right now. Pretty much everything in my portfolio is green. We're green in extra space storage. We are green in that. Why, Ian's might be thinking, why is this such a big deal to this dude? I was down 26% at one point in this company. 26%. But I held on. I did my research. I was a believer. Look at this. Nuts what they've been able to do. After their earnings, they're up 30.3%. And I was buying in the hundreds. I was a believer in them. I still am. I think that they've got a great future ahead of them. It's a reason it makes up quite a big holding in my portfolio. When it comes to real estate investment trusts, Extra Space Storage is one I went with. They did the acquisition of Life Storage. They're now the number one in units in the United States, 3,500 plus. I think they're in 48 different states. There's a lot to love about Extra Space Storage. I'm very excited to hold this company for the long term, and I'm very happy with my buy-in price for it. But yeah, just revenue 16.7% over the last 10 years, free cash flow 19% over the last 10 years, and this is just going to be growing more as those Life Storage units that they bought, like, they start generating cash flow for them. It's just going to keep going up and up and up. But yeah, they pay $1.62 a share. I'm curious what their next hike is going to be. So this looks silly. They split it into two payments, but it still comes out to $1.62. But 15% dividend growth over the last 10 years. That is some great compounding going on right there. Some really good compounding. Up 25% in the last month. Does it still have more room to run? Yes. Yes, it does. See, the thing that kills me about some news articles like this is they try to create fear, uncertainty, and doubt by doing it, because to like a newer, not as seasoned investor might read that and be like, oh my god, did I miss out? It's up 25%. Am I me no get no more gain? When it doesn't show that it's still down, even though it's went up, it's still down almost 7% on the year. And if you look here, it tipped the 170s. So really down 7%. It's down more than that. Let me get my handy dandy calculator here. We're going to calculate this. Okay, it's at 134, and this thing we'll say 169. This is still down 21% on the year. Like, it says 7, but it's accounting for January 1st. But from its peak this year, it's still down 21%. And I am still a believer in them long term. I think that it's going to be great things in the future of Extra Space Storage, especially with interest rates. Those start dropping. I'm telling you, these REITs, guys, not financial advice, but do some research. Look into some REITs. You might like what you see. You might not. I like what I see with some real estate investment trusts right now. Really, really like what I'm seeing. So has anyone got any plans for the day? Anything planned for the evening? I know I might get the family up and go play some Pokemon Go. I'm a big Pokemon fan. It's the only tattoo I got. It's a Pokeball. That's probably what is in store for me today. Oh. I think my watch list got a little bit out of hand. I might need to go through this and clean this out a little bit. But I don't know. I kind of like everything that's here. My watch list is too big. There's no way I'm going to buy all these. I don't know. I like them, though. I might get rid of the health stocks. I'm not too fancy on holding healthcare stocks personally. I don't know though. I mean, I'm so undecided. The thing is, I have in the past, but I don't own any healthcare stocks. I don't own any energy, no utilities. It is tech, industrial, real estate, consumer. I'm sure you might make the argument that MasterCard is financials. Sure, but they do a lot more than just that. This is another company I wouldn't mind being able to buy more of. Like the last time it dipped, I absolutely jumped in on this. I sold companies just so I could buy more MasterCard. My only regret is not jumping in more heavily when it did dip back in October. But I will have the opportunity again. I know I will. I just gotta be a patient little fellow and let them come to me. Just let the stock prices come to me. And if it doesn't, I'm just gonna accumulate cash, have it sitting on the side, and be ready for when they do. But I love this company a lot. The whole, if you could only own one stock thing, it very well might be MasterCard. MasterCard, Visa, the cards, debit cards, credit cards, those are always going to be around. The SVD default hurt all of their financials. Yeah, that hurt a lot of stuff. When Silicon Valley went down, it hurt a lot of companies. And it spooked a lot of sectors. I know a lot of banks are still feeling it. Bank of America, one of the big 7 of the bank world, is still down 7% year to date. Over last year, 10%. Like, a lot of these still haven't fully recovered from that whole scare, really. Because it was, there were some other banks that went under too. There were a couple of them. No, Morgan Stanley's still feeling it. If you can hear that, guys, I got some kittens. They're just running around. There's been a time or two they've ran into the Christmas tree, so sorry if you hear a loud crash. They are just sprinting through the house right now. But yeah, there's a lot of banks that are still spooked because of what happened. Again, I don't own any banks. Not saying they're bad, not saying they're a bad investment. It's just I personally don't own any. Whew. So what's the Fed meter hike looking like here? I'm curious at what is being priced in. Another next meeting's in 11 days. Oh, it's gonna be a crazy market day more than likely. Yeah, right now 98% chance they don't do anything, a 1.2% chance they increase it again. If they increase it again, I'm telling you, it is not going to be good. It looks like there's a greater than 50% chance now that we get our first rate cut in March. That's kind of scary. What is going to go wrong in the next 3 months to where they feel like they need to decrease rates? Because Powell, I've listened to some of his meetings, and he's been very adamant on rates higher for longer. But I don't know. I'm gonna have to look into this a little bit more because this is a little spooky. There's a greater chance than not of 2 cuts by May. Do they think GDP for Q1 is going to be that terrible? This is throwing up red flags in my brain. I mean, of course, it's a good thing, rates going down. But what's going to push their hand to this? I know they had originally forecasted, I think, 1 to 2 cuts for the entire year of 2024. We'll click here. December. In next year. They've got 1, 2, 3, 4. They're priced in 5 to 6 cuts. Rate cuts by the end of next year. So it's tripled from what they were originally going to do. So I don't know if next year is just going to be that bad, if inflation's going to turn to deflation. I don't know, but that's a little bit concerning for me. I know there's a lot of talk that there's going to be a bust, an AI bubble's going to pop. I don't know. I think AI is too strong. I think technology is too strong. I think the economy is too strong right now for it to bust. Excuse me. But I don't know. It's definitely something to keep your eye on. Definitely something to be thinking about, because they originally said 1 to 2, and now they're pricing in, 5 to 6. I don't know. Get my energy drink in for the morning. Whew. These kittens are losing their minds. I wonder if I can catch one for you. Come here, baby. Hold on. So this is one of the things that you hear running around. He's a cute little fellow. And he's got a brother who is orange. Hey, buddy. I'll let you go back to running around. But he's got his brother's orange, and if you hear random crashes here and there, that's what it's from. They're running into the Christmas tree, and we got a little metal barrier around it. Oh, my dog's got jealous because I picked up a cat. Hey, buddy. Oliver. Let me try and grab the other cat. As I said, his brother is orange. He is a sweetheart. I will let you go back to running. Kitten cam. But yeah, if you have been hearing random loud metal crashing, they're running into the Christmas tree guard that we got up. Got so many animals running around here. Love them to death, though. Love my pets. So you guys got any pets? Anybody got any dogs, any cats? The thoughts on M1? I love M1. M1 Finance is what I use for everything. Out of all the brokerages, M1's the one I like the most. I like the whole pie setup. Kind of organize out your allocations. My M1 is a little bit... My tracking with it's a little wonky because I've had 2 big withdrawals over the past 3 years. Well, 2 years now. No, going on 3 years. Oh my gosh. So I wish that was something that they were able to fix, but they can't. So that's the reason I track my portfolio myself on the side. But yeah, I mean it's a great brokerage. I love them. The only thing that is kind of like is they don't do options, but I mean I will survive. It is okay. You have a dog and a cat? Yeah, I've got a big old pit rot, and he weighs about 130 pounds. He is the biggest baby. Cute little dude though. But yeah, I like M1. I opened up a Schwab account at one point, but I just kind of, I don't know. I just like I like M1s. Could always do TSLY for option income. If I was to do anything for income related things, I don't think it would be TSLY. I would, what is the yield on this? Oh, they pay out a lot. What was that? Like a I can't brain think. Um yeah, if I was to buy anything, it would probably be Devo. Just reliable. Um and they do have some decent appreciation. They're up 20.8% over the last 5 years. Over the last 10 years, 42.2%. And you might be thinking, "Oh, that's only up 42% over the last 10 years. What are you talking about? That's dumb." Uh I mean, you're collecting 4.5% yield year over year. So really, that 42% is closer to 90. So right at 9% over the last 10 years, and that's not factoring in the dividend snowball effect. But if I was to if I was to own anything, it would probably be Devo. I feel like it's a lot less volatile than something like TSLY. I mean, not to hate on it. I know a lot of people that love some TSLY. It's a little bit choppy for me, a little bit too choppy for me personally. Whereas I said with Devo, it's kind of very. I know that I'm going to get a little bit of appreciation with it, plus that dividend. I mean, their dividend, it's been generally flat. This is the only downside. It's been pretty flat forever. It's not really went up. It's been anywhere between 13 and 15 cents a quarter since forever, according to Qualtrim here. It's never really you don't really get that big of dividend increases with Devo. Which, I mean, again, it's fine, but I'm not in any need for a dividend generating ETF right now. Or really any high yielders. My highest yielder right now is Extra Space Storage and SCHD. And I'm fine with that. SCHD makes up over 34% of my portfolio. And the rest of my holdings make up anywhere from 13% with MasterCard down to, I think, 8 or 9% with Apple. The others kind of fall in between that range. And then Ulta is below 3. Well, it's probably 3% now. And then Celsius is right at 2%. So I have 5% of my portfolio is dedicated to growth stocks. And 95% of my portfolio is dedicated to those good old dividends. So I think it's a good balance. And I mean, my holdings list, it's not too big, it's manageable. My only concern is if I end up just going crazy one day and buying a bunch of different holdings and then I have too much to keep up with. Right now it's very manageable. One ETF, and then I got 2, 4, 6, 8. I got 8 individual holdings. So I feel like it's very manageable. I made a video on this. How many stocks should you hold in your portfolio? And yeah, I like being very condensed. I'm hoping when I'm at 10,000 or 100,000, if I can have 1 ETF and 9 total holdings by that time, sounds great to me. Sounds great to me. Woo. We got any other anything else we wonder about? Any other questions? If not, may end it there. We've been going a little bit over an hour now. I greatly appreciate everyone dropping in though and saying hi and checking everything out. I do intend to continue doing some live streams on the weekends. I think that's what would be best going forward. Maybe not like Saturday and Sunday, but at least once a week jumping on here shooting a breeze with yins. I think it'd be neat. I like just hanging out, chit-chatting with yins, seeing what everybody's into. And if yins got any any stock recommendations or anything you want me to look into, go to my community tab. You might have to scroll for just a second or two. I made a post asking for you to comment some things you would like me to look into. And as that's growing with time, maybe that's what we could do next week for our live stream, is go over some of the stock shins recommended. I think that would be neat. I think that would be fun. Just let me know. But yeah, I think I'm going to end it there. Again, if you haven't, make sure to check out my recent uploads. I greatly, greatly appreciate it. Everyone's support's awesome. And I hope everyone has a great, great weekend. Take care. See you.